But California is the most aggressive state when it comes to taxation. They are even more aggressive than the IRS. If you get a California audit, it is worse than getting an IRS audit. If you are making less than 7 figures, your audit risk is less than 1%. As soon as you are making over 7 figures in net income, your audit risk goes up by 10%. As soon as you're an 8-figure earner, your audit goes up by 30%. I think we as a society don't know how to practice delayed gratification with our money. Early on as a business owner, there needs to be $50,000 in your bank account at all times that you just look at and you don't touch, and you practice the discipline of just seeing that money. Then anything excess of $50,000, that becomes investable assets.
Back in the day, like, you ever like spit game talking about stuff like this?
Are you deducting that macchiato right there? You know, $5.99 goes a long way with the IRS.
That's a 50% deduction, baby.
Hey, what's going on, guys? And welcome to the episode. So today we got Carlton Dennis. I appreciate you, man. Thank you so much for coming on.
Thanks for having me.
We've had him before on previous episodes.
That's right.
And today, I'm going to be honest with you because I don't like lying. This is a re-recording of the introduction. So we've already recorded the entire episode, and we spent a good hour and a half like going super in-depth about like just strategies on how to like save money on taxes, how to invest your money, when you should start investing your money, where you should put it when you start investing, and like how you should like, you know, specify on where you put your money when you start making a decent amount. So I think it's going to be very, very fruitful. I appreciate you a lot, man. The freaking conversation was rad. I really think
we ripped.
Yeah, this is one of those convos, I'm not going to lie, where like if you're watching this, you're lucky because this is like straight up like paid stuff. Like I would assume your clients pay like high dollar for this information.
Oh, bro, only the best for your audience.
Yeah,
man.
I appreciate it.
I don't hold back. I don't.
I love it.
I'll be honest, I caught myself so many times where like when he would just go into depth about explaining something, I would look at him like this.
Yeah, take notes.
Yeah,
I'm like,
bro, I'll be looking over at BB. I'm like, bro, he piercing through my soul right now. I'm like, should I look behind me? Is there a spider?
full circle, baby.
And yeah, so without further ado, guys, enjoy the show. So I guess we were talking about like from a structural standpoint. Do you guys have any questions at all from like a business standpoint? Or you're just kind of listening for now.
I mean, we'll tackle on after.
Go.
Yeah.
So I'm just so now let's just assume I'm throwing random scenarios that I've kind of faced in my life. You know, that's because I feel like
that's what people want to hear, though.
Yeah.
Like, what's the scenario that you're dealing with?
Yeah. I feel like because a lot of people can learn from this. So like, take my scenario right now, for example. So like we have business, things are going like we're not really profiting, right? Okay. And I pay myself just enough to pay my bills, right? Which is, and then like kind of but at the end of the year, I mean, I guess the taxes do go out of the company. So like right now, I just filed right now for the company, but technically, I'm in the midst of like switching corporations too right now.
Yeah.
So how would you because let's just say someone is caught up in that where it's like at the end of the year, tax bill comes up. Holy crap, I don't have enough cash in the bank. How the heck did I get to this point?
Yeah.
How do they save themselves from getting there, you know? Okay,
so first off, every taxpayer should know that they should be in control of how much they pay in taxes by doing proactive tax planning. So 95% of all taxpayers will wait until the months of January, February, March, and April to think about their taxes because that's tax season. That's when you're getting your W-2s, your mortgage interest statements, your property tax statements. Pretty much anything that you need to file your tax returns comes in the end of January, early February. But savvy taxpayers, which is like the 5% of all taxpayers, they're busy between the months of October, November, and December because they know once December 31st hits, that ball drops in New York, that's it. Whatever they wanted to do from a meaningful perspective to reduce their tax bill has to already have been implemented. So if you're a taxpayer and you're dealing with a tax bill that you can't afford to pay because there's not enough money in your bank account based off of what Uncle Sam's telling you need to pay, then this is your opportunity to get on a payment plan and focus on building your revenue up so then you can pay off the IRS. The IRS will let you get on a payment plan over the course of 5 years. So you don't have to be in a rush to pay them back, nor does it affect your personal credit. And that's one of the things that many taxpayers worry about is if I am on the hook with Uncle Sam, is that going to prevent me from being able to get an auto loan or a mortgage, right? If I'm trying to build my wealth.
So and then another question, because I've gone through this, 2 audits 2 years ago.
Dang. That's some unluckiness right there.
Yeah. I've had so much, like so many.
How did they go? How did they end?
It's still not done.
Okay.
Actually, like I don't know if I should be saying this publicly. I haven't filed in 2 years.
Okay.
Yeah, because like my guys are like, don't do it.
Okay.
Until it closes the case. So, anyway, I don't want to talk too much on that, but
audits take a long time.
Damn.
Yeah.
Audits take a long time,
He
and that's something that most
for like
people.
8 months too, and like.
That's something that most people don't know is like when an audit happens, it's just not a matter of you just sending back over what the IRS auditor wanted you to send over so they can validate what they were questioning. With the IRS, you're innocent until proven guilty. So if you start sending information over to them and you don't have proper representation, they're building a case against you using the information you're giving them.
And I noticed that because the
this
IRS,
is the craziest
dude, the
thing.
IRS agent would like call me and he'd be act so nice. He'd be like,
Act
"Hey,
so
man,
nice.
How are you? How you been? Listen, I know you're a young kid. You just made a lot of money, and like you probably don't know what you're doing. Just tell me a little bit more about like your story."
Yeah.
I'm just like, dude, this guy's kind of like, So I remember the first time he reached out, I hung up. I called my lawyer. I'm like, hey, I was on the line with the IRS. Like, this is that. He's like, yo, call your accountant, bro. Call him up. And he's like, yeah, don't tell him anything.
Nothing.
So I give him power of attorney, and he's just been handling the whole case.
Yeah.
But he actually, it's funny because, like, he came back at me with, like, he said that he gave me the maximum penalty that I had for my bracket just because, like, he felt that my things were unorganized. So we've been disputing that.
Oh, yeah, you can. You have a one-time penalty and abatement. So what this is if you're ever in a situation where you pay the IRS late or you owe on your taxes and you don't pay them on time, you can do a one-time penalty and abatement. All the penalty fees and all the interest fees, you can wipe it away, but it's only once in your lifetime. Really? So if you're somebody that's self-employed, or even if you're a W-2 and you get into a situation where you file your tax returns late or you owe the IRS, use the one-time penalty and abatement and remove all the penalties and all the interest fees and just make sure you don't do it again.
Yeah, nobody knows this stuff.
Yeah.
Like
Is it one of those things which you would recommend to someone like don't do it until you're
high net?
Yeah, like super up there.
It depends on the situation, right? Maybe you're in a financial hardship. Maybe it's a COVID type situation. You're going to be filing your returns late and, your business is suffering and you weren't able to apply to get the EIDL loan or the PPP loan because you didn't know how to do it correctly. And now you filed your tax returns late, plus you owe penalties, plus you owe interest fees, and you're in a financial bind. I would tell you there's no time better than now to use that penalty abatement and interest abatement if we don't know what's going to happen next year or the year after that, right? You can only control the situation.
Will that affect your credit at all?
No, it does not affect your credit.
So it's not like a bankruptcy?
No, it's not considered a bankruptcy, nor is it reported to credit bureaus.
I actually, speaking of loans, you know the small business loan that was passed out during COVID, right?
Which one?
The SBA, what's it called?
SBA loans, yeah.
Yeah, there's a few.
So I was reading, I don't know why, I go on Reddit a lot, and I went through a forum, people asking the question of, like, do I have to pay back my SBA loan? And, like, I was reading online, like, if it was, like, under $25,000 and it's unsecured, like, you can actually walk away scot-free from it completely. Do you know anything about that realm of, like paying back your loans that you might have pulled out in COVID if your business is in, like, a weird position right now?
Yeah, there was two different loans. There's the PPP loan and the EIDL loan that was, like, very notorious. And so the government created this stimulus package and they printed all this money. So if you're on the PPP loan, the Paycheck Protection Plan, if you had qualified employees that you kept during COVID for a certain amount of period, or if you suffered financial hardship, that loan was 100% forgivable. So if you took on a loan and you received money from the IRS, that one you don't have to pay back if you follow everything that they say. With the EIDL loan, that's an economic injury disaster loan. That loan was given to a majority of business owners, but many of those business owners didn't realize that one you do have to pay back. Even though it's over the course of 15 or 30 years, it's still a loan that comes with an interest rate that you have to pay back over time.
Yeah, because I was reading online, like, if it's under 25K, it was, like, unsecured. And so, like, if your business goes under, or like something happens where you have to close shop, you can close the LLC and they can't do anything to like go after it because it's unsecured. There's no.
That's another thing. People don't realize this, but Donald Trump was playing into the bankruptcy laws for multiple years, which is how he built his wealth. So he had multiple different business ventures that performed at a loss, or he had loans that he could not repay back. And rather than just keeping those loans on his Social Security or associated with his EIN numbers with his entities, he actually shut down those entities and filed bankruptcy for those businesses. And he was actually able to walk away from multiple different loans just simply because some of his business relations were underneath EIN numbers instead of his Social Security number.
Like Taj Mahal.
Exactly. Yeah.
All right, so talk to me.
Wild.
Do you know anything about corporate structure? Like how to, like, for example, I know once you go after like a certain bracket, is there, let's just say someone's doing, and I've always been curious, I'm not there yet personally, but I've been curious. Like, let's say someone's doing $10 to $15 million a year, or in the multi 7-figure, 8-figure bracket. I know there's like a way to set up different corporations to have like different things so that you're like very far away from the business in case something hits it. Do you know what I'm talking about? Can you like explain a little bit more on like what that structure looks like?
Yeah, so there's a difference between entity structuring and entity layering. I might set up my entities in a certain way to minimize my tax bill, but then I might layer entities to create more anonymity, and I might layer entities to also defer taxes. So you'll see some business owners will eventually switch their entity from an LLC to like an S corporation to save money on taxes. But eventually, you're going to start making more and more income, and the S corp goes all the way up to 37% tax bracket. The C corp is only at a 21% tax bracket. So that's a 16% delta right there, right? So if I'm making multiple seven figures, I have to look at considering the C corporation. But some people are hesitant to go into the C corporation because when you draw money out of the C corp in the form of a salary or dividends, that's when you deal with the double taxation. So sometimes we'll have an S corporation establish a C corporation management company that just manages the S corporation. So we'll move money over from the S corp to the C corp. The S corp receives a tax deduction. The C corp has money that's being taxed at 21%. Now I can choose to just take money out of the C Corp in the form of a loan and loan it back to my S Corp every time I need assets inside of my S Corporation. Or I can set up this C Corporation to be on a completely different fiscal year end. My S Corp might file tax returns come April 15th of 2024. My C Corp may not file tax returns until 2025. So I bought myself almost 21 months to pay the taxes in this new C Corp I just set up. So when it comes to entity games, look no further. I would love to talk to anybody when it comes to that.
That's interesting. And like, when should somebody start doing the layering? Should there be like a revenue bracket you should achieve first and then start thinking of layering?
I think the first question is when should somebody consider having a tax strategist outside of just a tax preparer? Because there's someone who files your tax returns every single year, right? That's the CPA. Every single person with a pulse who makes over $13,000 has to file a tax return. But then there's specialized tax strategists like myself who solely focus on helping people reduce their overall tax bill. So after you've kind of had a couple of conversations with your CPA and you find out this person's really just filing a tax return for you, you'll go around your CPA to figure out, okay, what are the top 1% of business owners doing to minimize their tax liability? Then you'll start running across various different strategies, setting up advanced corporations, entity layering, anonymity, Augusta rule, children on payroll, and that requires someone who just focuses on strategies to be able to guide you and implement those strategies with you. Because the CPA spends most of their time filing tax returns. They may not spend a lot of time studying tax code to formulate strategies.
So when should somebody get a tax strategist then?
I would say when you find out that you have a tax problem that your CPA can't solve for you.
Okay.
And that's typically when the client will reach out to my company or at least try to get in touch with me. Hey, I was told I had to pay this. I don't want to pay it. What are we going to do? What can I do? That's only going to happen from education, because at the end of the day, you're going to do whatever your CPA tells you to do because, well, he's the CPA, he's the professional. If I go into the doctor's office and they tell me I need moxicillin, okay, I need amoxicillin to make my sore throat go away, right? So you're going to trust your CPA until you decide to get educated and learn other things that you could do outside of what's happening in your CPA office. And that's when you'll stumble across tax strategists or tax attorneys that solely focus on strategy.
That's so interesting.
So I got a question.
Yeah.
So like, say a person wants to start off with like a business, right?
Yeah.
Out of all the S Corp, C Corps, and LLC, right? Out of all three, I know it might be situational.
Yeah.
But like your basic entrepreneur just wants to sell stuff on eBay, right?
Okay.
Or Amazon, for
E-commerce.
example. Let's just e-commerce. Let's just use that example. What would you recommend? And then after that, what is that level that they might reach until they might want to think about switching over to, like, say, a different corp?
Yeah. So I would say it is situational based, but let's just say you're starting out an e-commerce business and you don't have the intention starting out to eventually sell this company for a multiple. Well, we'll probably start out with just a regular basic LLC. Like, we just need to get our feet wet in entrepreneurship. And the LLC is the easiest entity structure to establish and manage when you're getting started because it has the least filing requirements and the least complexity of all the entities. But once your business starts profiting, meaning net business revenue is around 50 to 60,000, that's when we switch you out of the LLC and we upgrade you to an S corporation. Because now we don't want all of your business's profits being subject to self-employment taxes. We want you to take a salary out of your business, and that'll be the only amount that's subject to self-employment taxes. And the benefits don't really outweigh the cost to switch over to an S corp and pay S corporation fees until your business is about 50 to 60,000 in profit. So I would say that's the benchmark to when someone would jump into the S corp. The benchmark between someone jumping into the S corp and a C corporation is so convoluted because it might make more sense for someone to stay in an S corp depending on what their goals are and establishing a C corporation as a management company, or if they truly are going to be a business that's going to become a publicly traded company or they want to sell their company, we might look at transitioning to a C corporation when they're doing more than 2 million in profit.
Yeah.
Yeah.
So like say if like a person like in that thing, they start off their business and they're starting to make some money.
Yeah.
And they haven't really like reported anything yet because they don't know. Say if they've been dealing with cash, right? Because a lot of people like to sell stuff like just, you know, on eBay, like not on eBay, but like offer up, for example, for like going to yard sales or picking up some like J's and
Right.
just flipping them and stuff like that. And say if you get like paid cash.
Yeah.
Say you're like in 1 year, you already made about 50 G's, 60 G's, but it's under the table.
Yeah.
If you want to go ahead and you want to just start making that legal, right? And say you already have an LLC, you have your basic LLC,
Yeah.
and you're chilling. Say if you're banking with one of those big banks like Chase or Wells Fargo, how would you then go about putting your money into the account to then make it basically legal?
Yeah, absolutely. So let's just say I received that $50,000 directly to me cash. It's underneath my pillow right now.
Yeah.
I would need to go to the bank that's underneath that EIN number LLC and tell the bank, this is all business cash. This needs to be deposited with you guys. Now, they might be a little bit suspicious that you're walking into the bank with $50,000.
Yeah, like-
Some bankers would be like, hold on a second, we don't take all this cash at once. But you could definitely make your banker do that. And if they do take on the cash, then that money gets deposited into your business bank account. When you file tax returns, it's underneath your EIN number. So you have to report the income that the business made in the year. Even though Carlton may have earned the income January through August, just doing transactions with people in person, if I put that money in my business's bank account, it's as if it's been there since January to the IRS.
So it doesn't matter if it's December.
It doesn't even matter if it's December.
Oh my God.
Yeah.
Okay.
And that's reportable income with a tax consequence if you don't have deductions that work against that income.
So say if like, my bad to cut you off here because I think you wanted to say something. Wow. But what happens in this case, if like I put in the $50,000,
Yeah.
right? And then I want to have some sort of deductions.
course.
So I have my personal car.
Yeah.
Can I then rent out my personal car to myself from like my personal, I'm renting it over to my business for like a daily rate?
Yeah, but you could just allocate it over to the business and just receive the deduction based on the business use. So in order to write off a vehicle for business, it needs to be more than 50% business, 51%, 52%, as long as it's more than 50% business.
How can you prove that?
The IRS will require you to document. So when it comes to documentation, it's two different ways. You can track your actual expenses, so your car payments, your car insurance, your tires, your car washes, or you can track mileage. And the IRS lets you take, I think, about 65.5 cents per every single mile you drive. So
Okay.
let's just say you're driving Monday through Friday, but then on weekends you're personal. Okay, well then we can divide up based on, you know, the 365 days in the year, how many days that you were driving that were business related relative to the amount that were personal, and then we get to calculate that on your tax returns as your professionals. Does that make sense, guys?
Yeah.
No, it does.
I love this. This is like we should like block this content and like put
Honestly,
a price tag.
Why don't we just give the man a whiteboard like right there in the middle? Just so, like,
That would be a sick podcast. 'Cause I would
Yeah,
love
that honestly-
numbers on a podcast.
I wanted to bank off of his question about, you know, depositing a lump sum into the bank.
Yeah.
I know for personal accounts, I don't know how it is for business accounts if it's any different, but I know for personal accounts, if you deposit anything above 10K in cash, the bank has to report it to the IRS that you've deposited lump sum. Now, for a business account, is that rule apply, or does anything going into the bank be considered as
Business income.
business income?
Not anything going into the bank is considered business income because as a business owner, you can self-fund your business in order to get it started. Maybe I was starting a McDonald's. I had to buy fryers. I had to buy oven mitts. I needed to buy, you know, raw potatoes. I'm buying all these expenses, but should I have put that underneath my personal? Or if I'm starting the business, shouldn't I move some of my savings over into my business so everything is done inside of my LLC and then take the deductions inside of my business? So the money that I moved over into the LLC, that's called a capital contribution. That's an asset on the books, which means I'm not going to be taxed on that money. I have to be reimbursed that money once my business is profitable. So even though I put 50 G's in it and it's a capital contribution of my own funds, My first $50,000 that I earn on top of that's not taxable because I put in 50 G's until I start taking that money back out in the form of a reimbursement. That's called an accountable plan is what the IRS calls that, because you need to account for the income that comes in and reimburse yourself back via the LLC.
Now, is there a certain time period from when you open up your LLC, let's just say, for example, in this example, is there a certain time period where there's like a cutoff where it's like, let's say, for example, it's like your second year into the business, right? And you're like, oh, here's a lump sum of cash that's going to be, capital. Is that allowed, or is it like, buddy, that should have been like obviously in the beginning of when you established your LLC? Does it still work?
Oh, absolutely. Let's just say, for example, and obviously the IRS is going to want you to report 100% of all the income that you earn. But let's just say in 2022, I earned all of this cash and I wasn't responsible. I didn't follow the IRS rules and report the business income. But then in 2023, I want to grow my business. I want to report stuff. So then I deposit all that income in 2023. It probably would have been better for me to report in 2022 because I probably would have gotten more deductions since deductions go down every single year with the current tax laws we have in place. But I'm reporting it this year, so I'm going to pay taxes on it relative to when I file my tax returns. The IRS isn't, at my house looking underneath my mattress. They're trusting that I'm going to follow the law based on what they put into place. So if I do report that income, that's taxable to me when I choose to report it.
Do you think a business owner should know all these things, or should they just focus on making money and just hiring guys like you?
I think it's twofold, right? I think that when you're getting started out in business, you should know how to bake the cake. You should learn how to practice with the ingredients before you say, okay, here you go. I'm going to let you bake this cake for me. So if you want to be a successful business owner, I think to a certain extent, you have to get your hands dirty just a little bit. You should understand how to read your own tax return. You should understand what a business deduction is, what a business credit is. You should understand what is remaining in compliance with the IRS versus not remaining in compliance with the IRS. So that way, when you turn this over to somebody, you know whether or not they're actually doing things at least according to the standards that you know. And then, of course, they'll educate you on some of the areas that you don't.
I see. Yeah, so learn how to speak the language a little bit so that you're not played as a fool, basically.
Exactly.
Yeah, dude, it's important. It's heavily important because.
Well, I mean, yeah, but I feel like a lot of businesses that's the last thing they think about. I don't.
Well, think about it.
Right.
I think about crypto every time someone asks me a question like that. Is I would hate to be in a situation where I'm talking with 4 different people and they're all talking about crypto and I don't know what Bitcoin, Ethereum is, what a blockchain is. I'm just sitting here without any knowledge, right? But then and then I'm telling them, oh, I like investing. Right? Then I look kind of silly, right? So if I'm going to get on the phone with a tax professional, I'm like, oh, when do we file tax returns? He's going to be like, are you sure you started the business? So I want to at least have a little bit of skin in the game. I want to at least pick up an ebook or, read at least something that's going to give me, a basis before I walk into that conversation.
Now, do you have any courses that people can actually go on and purchase or just view,
yeah.
ebooks and stuff like that?
Oh yeah, absolutely. So Tax Alchemy is my brand, and we have a flagship program where we teach everyday taxpayers how to invest in real estate to reduce their overall tax bill. It definitely has a real estate focus, but inside of that program, we've created tons of different mini courses that pertains to various different deductions that most people are interested in. Placing their children on payroll, how to pay themselves with an LLC, how to transition over to an S corporation, and tons more.
So say if I open up my LLC over here in California, but then I know that Wisconsin or Wyoming, those kind of states, Montana, are a little bit more favorable, right? Regarding taxes and so on. Is it too late for me to relocate my LLC's location from California to, say, Montana? And if not, how can I do that?
Yeah, so you're right. There are states that are more tax favorable states. When it comes to relocating your LLC, that may or may not be something that you would want to do based on where you currently live. For example, if you're a California resident, you're earning California income. It doesn't matter whether you have an entity that's established in Nevada, Montana, Wyoming, you're still going to pay California taxes. So
can I just, something on that point, but I've heard this before, that doesn't incur if the client is outside of California. Is that correct? So let's say I do business, I'm established in Cali, but my business, my clients are in Canada, for example. I'm just throwing it. Does that change What you just said right there, that statement at
No.
all? Because I've heard that like if I have clients in Florida or other, I can like follow those tax laws. Is that like in any way correct? No.
California is the one state that taxes you on all income.
Of course.
And they're the one state that will make you file a California state tax return, and you'll pay taxes because you're a California resident earning income in California. Now, other states have different jurisdictions, but California is the most aggressive state when it comes to taxation. They are even more aggressive than the IRS. If you get a California audit, it is worse than getting an IRS audit. The state
Really?
of California has
Why would the state of California audit
They have
you?
better auditors.
Why would they
Better
audit you?
auditors, they're more aggressive, and too many people have made money via stocks in the marketplace and then will take their capital gains and move and then try to vest them or liquidate their capital gains when they earned the stock, they
Here.
earned the revenue here. So let's just say I was working for Tesla, right? And I was up in Silicon Valley, and Elon issues me a bunch of stock, and I'm like, holy shoot, this stock is about to vest. I'm moving to Nevada, gonna set up shop. Elon gave me the job when I was in California, plus he gave me the stock when I was in California. So that income, no matter when I vest it, whether it's 2-3 years down the road, California will come knocking, asking for the taxes on that because I earned the income. It was issued to me as a California resident.
That's crazy. Do you feel like there's a set income where like the IRS have like wide open eyes on you more than like you're like, okay, if you're making like 50 grand a year, well, no big deal. But if you're making like 10 million or something, 20 million, like at what point do you feel like you got more eyes that start to like watch you?
If you are making less than 7 figures, your audit risk is less than 1%. As soon as you are making over 7 figures in net income, your audit risk goes up by 10%. As soon as you're an 8-figure earner, your audit goes up by 30%.
30?
If you're an 8-figure earner. So if you're asking me, do wealthier people get audited more? The answer is absolutely. But the wealthier people are absolutely smarter around approaching taxes. They go into tax season assuming if I'm audited, what is all the things that the IRS is going to look for? Because I don't even have time to deal with the IRS. I'm just going to make sure everything's nice and neat and ordered. And if they ever come knocking at the door, look, good luck. Here you go. Chew on this for a while.
That's crazy,
Yeah.
man. Yeah. No, I love the details behind this. I feel like this is one part in business that's like you could speak on for like hours.
You know what I'm wondering, dude? I'm wondering, like, do you like get into details like this? I mean, you said you're married, right? But did you ever, like, back in the day, like, did you ever like spit game talking about stuff like this?
When it comes to taxes, bro, like I'll be honest, like
There's nothing sexy about it.
it wasn't. It wasn't a turn on for many people to jump into a conversation and be like, "Yo,
S corps and LLCs.
you want to learn? Are you deducting that macchiato right there? You know, $5.99 goes
like
a long way with the IRS. You know?
50% deduction, baby.
I did have
different
a
for me, and I honestly was doing fitness before I was doing taxes, so I was spending more of my time trying to, show off my muscles than I was actually trying to help people at that time reduce their tax bill.
When you were describing the whole thing where you were like, yeah, and then
Layering.
you're at layering, and then like your
layering.
S corp loans out to your this and that. For a second, I was just like, I was like, first of all, lost. Right, I was completely.
Please repeat.
No, forget repeating. Forget
very
repeating.
clear.
I'm just gonna back out. You know what I mean? Like I'm just far off. But then the other thing I realized was just like I could totally imagine like a scenario. You know what I mean? Where you're talking to someone, like talking to a girl at the bar, and you're just like, yeah, and you're explaining all this, and she's just like, I don't know why, but this is really cool. You know?
I'll tell you that taxes is not how I got my wife. When I met my wife, I was not even working in a tax firm. I had just moved back from Hollywood in with my parents because I had blown all of my savings ripping and running Hollywood, trying to be a fitness trainer, celebrity fitness trainer. I don't know why I labeled myself that. I only work with people that think they're celebrities. So I was ripping all of this money that I had in my savings account to the point where like I was living paycheck to paycheck. So I told my parents, listen, I'm coming back home, whether you like it or not. This situation's not working out for me. And if there's an opportunity for me to start a sales division in the tax firm, the family tax company, let me know because I've been working in sales part-time while I've been doing my fitness thing. And I think I got pretty good at this thing.
I love that. So it started as a family. So it's a family business.
It's a family-owned business. That's correct. I have my own consulting company that's separate, kind of like how Chase has their own private client group. So I get to work with my own clients. But yeah, it was a family business.
Oh man, I love that coming from a person that has a family business as well.
Yeah, man.
You know, that's awesome, man. And you don't really realize the benefit or like, I guess, what's in front of you, man. That goal that's in front of you. You know, until later on in life, until you actually try different avenues, and you're like, I'm gonna stick to the family's business.
Yeah.
Because this this is what's meant for me.
Yeah. And it wasn't what I initially thought was meant for me when I
Same.
first came into my mom's office. I'll be honest. I was like, yeah, I'm here to eat, make sure I could leave at 5 o'clock and get to the gym early before everyone else gets to the gym. And about 2 months into being in my mom's practice, my mom realized that like I created my own commission structure, but I hadn't made any commission. So she's like, dude, you sold me on wanting to come into my office and help out sell some stuff, start your own sales division. I let you create your own commission structure. You've sold 0 out of 0 anything. You haven't sold a tax return, Bro, we're in tax season. If you have a pulse, somebody needs to file a tax return. Yeah. But I didn't care about that. At the time, I cared about trying to become a physique star or helping people in personal training. But it was one day that changed everything for me is when I sat in my mom's office and I watched her close 2 people. She closed the first person on tax preparation. It was a quick, easy conversation, 30 minutes, husband, wife, whatever. The next people that came in, they were business owners, and they specifically said something in this call. Yeah, we want to figure out ways to reduce our tax bill so when we go into our CPA's office, it's just a slam dunk. I had never heard someone sit in front of my mom telling them, I just want ways to reduce my tax bill, and then I'm going to go work with somebody else. And then she turned around and slid them an engagement agreement for $22,000. In 15 minutes, they signed that engagement agreement, and their wiring information was inputted into our software, and it was processed back out a receipt. That was everything I needed to see. Because at the time, I was writing $22 workout programs per month, and I thought in my head, dang, I'm going to have to sell 1,000 of these just to make $22,000. I'm going to go get a recorder from Target. I'm going to sit it in her office, and I'm going to hit record. And that's what I did. I took that recorder the next day. I had 8 hours of content. I sent it to rev.com. Rev gave me my mother's transcripts. Now I was lethal. I knew how to sell tax planning, had no tax knowledge. Got on the phone, started making some commission, started reinvesting back into sales training. But that's what increased my revenue as a salesperson. I still wasn't a tax strategist. So what happened was one client finally came into the office and he humbled me. He said, show me what you can do with the tax returns in front of me. And that's when I felt like literally like a dog with his tail tucked in between his legs, bro. Like every ounce of testosterone left my body that day. I was like, bro, I don't know what I can do. We're going to have to call time out. Let's go get my mom because I can't help. Right? And then that's when I felt like, okay, what am I doing? Like, am I a salesperson? Am I a tax person? Like, dude, I need to figure this thing out. So I went on the computer that night and I said, okay, I'm not going back to school for accounting. That's just not happening. No way. But what's the highest definition that you can have in tax? And it was enrolled agent, highest definition of tax law and tax strategy, 3-part test. I click on the link and I'm like, okay, here we go. And 7 months later, I got my enrolled agent's license. I swear to God, I felt like a kid who got hit by a bus and had a superpower the next day. Like I was lethal, like ready to go, ready to communicate with anybody.
Is that something you would recommend that somebody not necessarily like gets the license to practice, but like at least a course for everybody to kind of go through if they are business owners?
I do think that's important. But here's the thing. You don't need to become a tax expert as a business owner. You just need to understand taxes as a business owner because business owners can leverage taxes better than W-2 taxpayers. So you do need to understand taxes as a business owner to a certain extent, or else you're not running your business efficiently, right? There's sales, there's operations, there's HR, but there's also taxes. Right, and as a self-employed individual, you have the control to impact how much you're gonna pay every single year.
So you brought up mortgages and you brought up properties, right? I'm interested in that. So say if like I live in California, and I want to go to an owner-friendly state, right? There's a more specific term, right? I know there's tenant-friendly, but then there's also not renter, but like the
landlord-friendly states.
There we go, landlord-friendly. So like one would be, how would I go about that? Say if I want to purchase, do like a flip, or maybe possibly just get one property just to fix up a little bit and just keep.
Okay, cool.
Right.
So if you're trying to get a property in a landlord-friendly state, I personally like Florida and Texas. That's where I own a majority of my real estate. Landlord-friendly states. Most of my properties are not in HOA communities. I can kind of do what I want with these properties.
Yeah.
Nice.
But the first thing is coming to terms with the down payment. I think once you can get that out the way mentally, like saving money, because that's the hardest thing for most people to do is just save money and be disciplined enough to save, and realizing, okay, that money is going to leave my bank account once I've saved enough. That part, once you get that mental part out of the way, then it's about connecting with the right people that can put the deal in front of you. Because most people are going to jump on Redfin. They're going to jump on Trulia and Zulia and every other, realtor, website. and they're going to think all of a sudden that they're an expert because of what they see. We all go to the grocery store, we buy things that we like. We all go to the mall and we buy things that we like. When it comes to real estate, it's not just about seeing what you like on the website and saying, okay, let's go for it. It's about numbers and figuring out how is this going to serve me not only right now, but in the next 10, 15, 20 years, depending on what type of investor you are. If you're a flipper, that's an active business. That's not a passive business. So that comes with completely different terms and completely different entity structures. But most people who are going into real estate, they want to do it somewhat passive. They want to earn cash flow, have a tenant pay down their principal, their mortgage, and then reap the benefits of being able to scale an investment portfolio. So if you're looking for that, then the best thing that you could possibly do is to buy an investment property that's also going to reduce your ordinary income, because that's how you're going to get to retirement faster. You're being taxed on your ordinary income, your LLC income, your S corporation income, or your W-2 income the most. When most people look down at their paychecks and they're looking for cash flow, could you imagine that every single W-2 paycheck that you had, you were getting 100% of that money? Not 25% of what you were supposed to get or 50% of what you're supposed to get. You get 100%, the IRS gets none. You can do that. You can be 100% tax-free if you buy the right real estate and you follow the IRS's rules. And that's what I pride myself on, is teaching everyday taxpayers how to invest in real estate, but use the real estate to offset their W-2 and 1099 income, so they're taking home 100% of their paychecks. Not 20%, not 50%, not 60%, 100%.
So in that case, say if I went ahead and I bought a property out in Texas.
Yeah.
And would I still keep it under my LLC in California, or would it be more beneficial, I guess, or tax friendly for me to actually open up a separate LLC for the state of either Florida or Texas?
Okay, so this
depending on where I invested it.
Yeah, and I'm glad you asked this. So since this is a passive investment, it's not an active investment, meaning it's not tied to what you're actively doing.
Yeah.
This is a situation where we're not going to pay the taxes here in California, and why we should set up an LLC in Texas, since that's what your business is, right? Although Carlton lives in California and he has real estate in Texas, I'm not going to let my California LLC own my Texas rental property. I will set up a Texas rental property so that way I'm not considered foreign to my own state from a filing requirement perspective. Mm-hmm. And most taxpayers will set up LLCs where they own their investment properties, and then they'll look to set up a parent company, like in some of the states that you mentioned earlier, Wyoming, Nevada, Delaware.
Okay, so like say if I went ahead and I own the property, and this is like a step forward. I own the property, I open up the LLC, let's just stick to Texas, right? Mm-hmm. From there, I have my own personal car over here in California. Mm-hmm. Say if I want to pay less and like just overall, like, I guess insurance and, you know, just my annual registration. A lot of people, you see a person with like a brand new Rolls Royce Cullinan, mm-hmm. right? And it'd be like Montana. So like, would I be able to then transfer, say, my personal car over to my LLC over in Texas to get a Texas license plate, get it registered out in Texas, so that way my insurance could go cheaper? Like, you get what I'm trying to get to? Like, how would you go about transferring over a vehicle over here in California, regardless of whether it's an exotic car or just like your average car, mm-hmm. over to, you know, obviously save a little bit more money?
Yeah. So I think you're referring to sales tax, and most people will buy properties. Most people will buy vehicles through a Montana LLC, because if you purchase a vehicle through a Montana LLC, Montana has specific laws for LLCs that state that you don't have to pay sales tax on the purchase of an asset through an LLC. So if I buy a vehicle such as a Cullinan and it's over 6,000 pounds, the IRS will allow me to write off the entire purchase price of the Cullinan at 80% this year. It was 100% last year. Mm-hmm. And I could save money on the sales tax if I purchased it through a Montana LLC. But now I have to take it upon myself to register the vehicle in Montana, get Montana license plates. If I ship the vehicle from Montana to California and I'm driving on the freeway or I get pulled over by police, I could get a ticket. I could end up experiencing a situation where they will make me register that vehicle in California and pay a fine. So you have to be very careful when you're buying vehicles through Montana and then shipping them over to another state. The intention is you're probably not going to be driving this exotic car too often. Mm-hmm. So the goal is you probably won't run into police too often. And believe you me, guys, I have tons of clients that do this. From a taxation perspective, it won't save you any money on taxes, because it comes back to, are you utilizing the vehicle for more than 50% business? Yes. And if you tell me, hey, Carlton, I'm living in California, but I have a property in Texas, how are you going to justify to me that you're using that vehicle for more than 50% business if your business is in Texas, aka the rental income that you're earning. Maybe you're managing the property from the convenience of your home here in California, but can you justify using that vehicle for more than 50% from your home here in California? Are you driving all the way to Texas in a Rolls Royce Cullinan? Probably not. So that's when we start to break down that whole deduction, and the IRS is like, maybe we'll throw this one out.
So what about in the case of like, okay, so you want to buy the vehicle from your for your LLC in Montana, right, or Wyoming or wherever, but then just to avoid the sales tax,
Right.
But then you register it in California.
Yeah.
Is that just a smarter way to go about it?
Oh yeah, you could 100% do that
I
after.
was flipping out. Yeah.
Now, a lot of taxpayers, get confused in regards to the vehicle deduction. So last year, the vehicle deduction was 100% if the vehicle weighed over 6,000 pounds. But it's not just the vehicle weighing over 6,000 pounds. The IRS has this term called gross vehicle weight ratio. And certain cars don't technically weigh over 6,000 pounds, but their gross vehicle weight ratio weighs over 6,000 pounds. And what comes into the gross vehicle weight ratio is how much is the car when weighing when all passengers are in, or when it's fully loaded, or next to a curb, or in a certain zone.
What about if it's like trailing? If it has a trailer attached,
Or if it has a trailer attached. So these different circumstances go into the gross vehicle weight ratio, and this is a statistic that is developed when the manufacturers make the car. So from taxation purposes, we look online before we write off the vehicle on your tax returns is, what is the gross vehicle weight ratio of your Mercedes XLE 350 or whatever it might be?
Huh. I want to, yeah. No, this is cool. You got to know all these things, man. I want to take it back to when you said, like, you should pay yourself first as a business owner. Do you have a, like, what's it, like a 80-20 rule or 50, whatever it is, a percentage rule where you go, hey, I think, like, you should pay yourself X amount of dollars or X amount of percentage, and then keep aside X amount of percentage for taxes, and then reinvest X amount of your business?
Yeah.
How would you, like, pie that out?
I think the standard rule of thumb is to save somewhere around 30% for taxes, but that's such a moving target relative to what you're spending in your business, right? If I'm not very profitable, I'm not paying 30% of whatever I made in the company to taxes. If, my business made $100,000 and we only profited 20%, right? Which was $20,000. So I shouldn't save $30,000 if my business profited $20,000. I'm not paying $30,000 in income taxes. So I think all of these different statistics that you hear online, they're just used as references to guide business owners, but it really comes down to what your income is, and that's a situation by situation basis.
So, I mean, but if you were to, like, give somebody just like a pie chart, like, would you say like 30% for taxes, like what, 40 50% for business investments, and then, like, how would you break that down?
Yeah, so for me, how it went early on in business was I kept 40% in the business's checking account. I moved over 30% into my business's tax account. I moved 10% into my business's investment account, and that left me 20% to actually live on. So I was kind of bootstrapping it early on as an entrepreneur, trying to take the least amount of profit from my business, but still profiting from my business. Because most business owners forget, you're not motivated to grow a business if you're not getting paid.
Yeah.
And that's the one thing that you have to understand as an entrepreneur is, sure, you have big aspirations. You want to become the next Elon Musk. That's great. Elon got paid, bro. He got an F1 McLaren at 28 years old. Okay. So he was paying himself on his journey to building Tesla and all these different spaceships that we see him rolling in.
Yeah. I think a lot of people get caught up in the whole hustle culture of like, oh, I'm gonna work hard and not pay myself for work out of a garage.
And there's nothing wrong with making sacrifices. I'm all about making sacrifices, but you got to turn around and feed yourself every now and then, right? And if you forget to do that and the situation changes, you're gonna wish you had. Right? Think about it. All of a sudden, we go into a COVID situation. I've been reinvesting everything back into my business, and oh no, now it's all gone. Right? I never took any profit off the table to cover emergencies, incidentals, reinvestments. I never took any profit off the table. I just reinvested everything and decided to bootstrap it. That burns people sometimes.
So let's say you do take profit. Do you keep it sitting in the bank?
Depends on where I'm at as a business owner. Early on as a business owner, you need to practice the discipline of just staring at money and not touching it. Until you get to 50,000. Early on as a business owner.
Personal.
Yes, bro. Personal.
Yeah.
Early on as a business owner, there needs to be $50,000 in your bank account at all times that you just look at and you don't touch, and you practice the discipline of just seeing that money.
Don't
Then
touch it.
Are you talking about
anything
personal-
excess
I-
of 50,000, that becomes investable assets.
Are you talking about personal money? Or are you talking about like literally your business, the cash that your business has?
Well, your business is going to pay you personally, so that's the personal income that you've taken out of your business. If you're fully self-employed, if you're W-2, it's 50 grand. If you're self-employed, it's 50 grand.
But if you
It's
have like
just how you're
employees
taking-
and stuff like that, that kind of changes a little bit, right?
Well, I personally would stick to the same metrics that I talked about, leaving 40% in profit in my business, but having that $50,000 before I start investing. I'm not going to tell somebody who comes up to me and says, Carlton, I have $30,000 in my bank account. What should I do? What investments should I be in? Bro, you're not investing anything yet. Get to 50,000 first and then call me.
So 50,000 is zero.
Yes, 50,000 is zero.
50,000 is zero.
Now you're in the room. Let me point
Welcome
you over.
home.
Now you're in the room.
Yeah.
Now you're in the room. Let me point you over to the water station because you're just going to start out with water. All of us over here drinking tequila. We figured out how to first save our money, then reinvest our money. You just got into the room, bro. Just grab some water and just chill and watch other people. That is what 50,000 is to me. You're just in the room. Anything in excess of 50,000 is when you can start to play. So if I have 50,000, okay, cool. That's just my security blanket. Anything on top of this 50,000 in savings, now I need to get that invested. You might start looking at a high yield savings account for that 50,000, but I would focus on that additional to be invested in the market. And what I would want to do is grow that money enough in the market so I can pull it out and make a down payment on investment property. And that's how I would go about building my wealth.
I'm not gonna lie. I wish I had this conversation earlier on in my life because I have lost so much money because of my stupidity on these things. So much because I made the mistake of like I made a lot of money really quickly and like I just spent it all. Like
You live and learn.
Yeah. So it's really
Money comes
cool.
and goes.
Huh?
Money comes and goes.
Oh, for
That's
sure, for
facts.
sure, 100%. You know what made me believe that when I started losing it.
Yeah.
I swear to God, to see it go out of my bank account as fast as it did in a weird way, like taught me such a big lesson.
Yeah.
No, I had
Of
to.
like
I had
you should
to,
never be attached to it because it literally comes and goes.
I had to
You
accept
shouldn't.
that idea that like just money comes and goes. I had to accept that idea simply because when the time, like, you know, we all go through just like ups and downs and like, you know, surprises that just
Yeah.
come up in life. You know what I mean? There's been so many times where it's like you go through ups and downs. You know, it's just the life of an entrepreneur, right?
Yeah.
And then there's sometimes where you're just like, you feel like, oh, dude, I'm hitting a good string of good luck. You know what I mean? And it's just like one win, one small dub after the other. And then all of a sudden something will just come around the corner and just surprise you with like, oh, you got to give up 2K on this. You know what I mean? Oh, this asset of yours just, you know, gone, you know? So it was one of those things where I realized I was like, if you don't grasp the idea that money goes and comes, right? It's just always up and down. It's never 100% constant.
Yeah.
You're going to lose your mind.
That's why Alex Hormozy says you have to be a little bit crazy to be an entrepreneur because I've not met any entrepreneurs that had nothing but straight wins. There's always losses.
That doesn't make sense, man.
And naturally, as we grow up, we want to bet on for sure's. Like our parents want us to be safe. We wear helmets when we ride bicycles. We put on elbow pads, knee pads. Like we want to make sure we're safe for sure. That's why the system teaches us to go get a job. Like, dude, be safe for sure. 401k is a for sure retirement vehicle, right? But in entrepreneurship, you're not taught to go set up 401ks. You're taught to reinvest back in your business. You're taught to go take risks and expose yourself and start content and do all these different things that require money and investments. And whether they pan out or not, you don't know yet.
Yeah.
And that's what makes entrepreneurs just a little bit crazy and why I love it too. Not everybody can do it.
So I wanna go back to what you said, right? And you were talking about, okay, 50K is zero. Okay, after 50, say if a person comes up to you, they have about like $100,000. Just keep it easy, right?
Yeah.
They have $100,000. They're like, hey, I have 100 G's. I don't know what to do with it. I hate the fact that it's chilling in my bank. It's not really doing anything. Help me out.
Yeah.
Right. You said that you'd possibly lean them more towards like property and kind of go towards that. But like, would you also like what other avenues would you take them down?
Well, I would take them down.
How would you rank them actually?
I would go down the first avenue that's been tried and true, right? I mean, although we're not, putting all of our money in a high yield savings account, we're trying to get some money that can actually grow for us and reinvest some assets. So I'm going to go down the avenue that's been tried and true. 96% of all millionaires as of 2023 have become millionaires through rental real estate. So I'm going to first try to help you offset the money that got you to the 150,000. You have had to have worked really hard and been really disciplined to get to that 150,000, the 50K of just emergency savings that we don't touch, and the 100K of other assets.
Yes.
That 100K should be put to work now, and putting it to work is buying an investment property that pays you, and at the same time you have a principal pay down, someone's paying down your mortgage, and you turn around and get depreciation. That little tool, depreciation, is considered a phantom expense. You don't have to pay for it after you buy the property. It's going to come every single year for you. You can use depreciation and accelerate it just like buying a vehicle over 6,000 pounds, except you're buying an asset that's what, 500K? And use that depreciation to offset your W-2 taxes. Imagine if you had a $200,000 loss from depreciation on your tax returns and you made $200,000 in W-2 income. You're tax-free. So the $60,000 that you would have paid in taxes all comes back to you in the form of a refund. What are you going to do with that $60,000? You would come back to me and tell me, Carlton, let's go and buy another one. This was great, man. I'm pretty sure we can get to retirement faster if we just keep this going.
Let's run it.
And this is what real estate investors do. They're always looking for their next deal because they realize the best part about real estate is depreciation, not the cash flow first. It's the tax savings.
You said it's
Then
the depreciation.
depreciation is number
That's
one.
so interesting.
Number
You
one.
would think it's the appreciation, like.
Oh, sure. If you pick a winner,
yeah, like you make money.
If
Yeah,
you pick
yeah,
a winner,
yeah, but
even
but-
Robert Kiyosaki can't pick every property that's going to appreciate in value.
Sure,
but he'll
sure.
tell you at the very least, I'm getting losses from it. That's going to offset my other income because I have these trading programs and these book sales, and that's making me the real money. Having tenants pay down the mortgage is not a lot of cash flow. Real estate doesn't give you a lot of cash flow. You have to go buy a 500 unit apartment complex if you want to have a lifestyle off of real estate.
Well,
Okay.
And
So,
is this
So-
yearly? Like, so this is like basically like if you keep owning the property year after year, you get tax deducted year after year for it, right?
Year after year.
Huh. That's crazy.
So the
Have
200,
you?
So my bad, but I want to kind of go a little bit more towards this. But 200K, right? That you're able to deduct it. Say if the house is $500,000. So you say like a car, for example, you're able to deduct about 8K, assuming that it has the over 6K and so on and so forth. With a house, if it costs $500,000 and you already deducted $200,000 in depreciation, once you get to 500,000, basically, aka the actual value of the house, can you not depreciate anymore? Or like a car, for example, once you depreciate to 100%, you can't depreciate anymore.
That's correct. So the IRS has depreciation schedules, and a vehicle is depreciated over the course of 5 years. So if you didn't buy a car that weighed over 6,000 pounds, you'll still be able to write it off. It's just going to take 5 years to write it off. So it's a $50,000 car. I get $10,000 every single year. Simple math. With real estate, if it's residential, you have 27 and a half years of depreciation, right? So that's too much time. So what savvy real estate investors do is they implement the cost segregation study. They're going to take 20 to 30% off the table up front, off tops. I want 20 to 30% of that $500,000. I want $100,000 to $150,000 in a loss year one. I'll let the rest of it come to me over the course of those other 26 and a half years. And this is how you get into a game of playing with depreciation every single year, because you still have 60 to 70% left in that 27 and a half year bucket, but I saved you taxes. So if you just take that money and you go spend it on luxuries, we're not building wealth.
Yeah.
I need you to take that money and reinvest with me, because I'm offsetting your working income every year with more assets. And eventually we'll just let the tenants continue to pay down your mortgage, and eventually down the road we'll live off that rental income. But that's not a concern to you. What's a concern is your working income.
So the biggest concern for a person right now, say if like I'm in California, but I got a rental property out in Texas, right? Like in this case, I would think, who's going to manage my property? So you'd probably be like, well, I could probably just get like a property manager. And then also the biggest thing is finding that A+ renter, right? That renter that's actually going to be paying, that's actually going to take care of the house, that's actually a legitimate thing. So what is your screening process? Do you actually do any sort of like do you have your hands on to any of the screening process or is it just more like, hey, trusted rental agency, right? Or property management agency, here you go, take care of it.
So depending on what strategy you're looking to leverage will determine your involvement in real estate. For me, I have my wife running our real estate operation. Although we have certain property managers in place on some of our properties that are truly turnkey properties, they don't require a lot of work. We hired a property manager to just manage over those properties. But because I'm using real estate losses to offset my S corporation income, my wife has to be involved to a certain amount of time in order for us to use our real estate losses. And the IRS deemed that time to be 750 hours. So she spends 750 hours a year managing our investment portfolio. We travel to and from Florida. She'll network with tenants. She'll screen them. She'll set up the Airbnb, furnish the property, get the cleaners to come in, and she's managing these properties herself. Sometimes, though, we'll have the property managers do 100% of the heavy lifting. So screening tenants, running background checks, that's completely on them. And I liked that process first because I was able to learn real estate by having a property manager do everything for me to then turn around and know what are the processes and procedures that I would need to implement if I'm managing my own.
Now, are they as transparent as possible? Because, like, say if they're the professional, they're doing it, like, if you don't ask, they really won't tell you what they're actually doing. Or would they be giving you like a monthly report of, hey, this is exactly what we did for the whole month. We screened this. Here's the whole steps of what we did. We cleaned this. Here's the cleaning crew, and specifically, this is what happened. This is how much it is. So, would they give you like a breakdown of, like almost like a progress report at the end of the month or week or whatever?
So most property management companies will give you year-end financials or month-to-month financials. If you're working with a really good property manager, they're going to print out those financials for you every single month. They want you to know how your asset's performing, whether or not you had any incidentals or expenses, whether or not the police were called, and whether or not it concerned you. So for me, I get a report every 15th of the month letting me know all the income, any expenses, and I even have it on an online portal. So if I don't want to check my email and I can log in, I can see when my tenants paid, when my mortgage got paid, because your property managers will pay your mortgage, and if there's any incidentals or repairs that needed to be dealt with that month.
So you're kind of you took the hands-off approach until you learned the game a little bit, you
Correct.
and your wife, and then your wife is just kind of taking over now.
Yeah, I took a real hands-off approach. Like I started off with real estate syndication. So before I even got into my own real estate deal, I partnered with other people on a larger complex. So I got to see what it looked like to get a property super big under contract, negotiate a loan, make improvements like adding swimming pools to the property, increasing rents, moving tenants out. Being on calls where I got to see other investors that were really, putting in millions of dollars, and I was just putting in a couple thousands of dollars. So how did they care about things? What things did they not care about, right? So I got to be in a group of investors. That taught me a lot, to the point where I was like, okay, I want some of my own tax benefits. I don't want to share it with all these people. Let me go and buy my own assets. And that's when I ventured out and got my own real estate.
You ever had anybody come up to you and go, "Hey, I don't buy real estate, I buy businesses"?
Yeah, of course.
Yeah, is that a whole different conversation to have of like tax benefits, or is it similar?
Oh, absolutely. Because when you're buying a business, you're buying everything that comes with the business. If I go buy the McDonald's down the street, that McDonald's may come with 5 different fryers, a driveway, the building. I might be buying the building too.
Ice cream machine that never works.
Ice cream machine that never works. Jesus, those McFlurries never come out when you're in the drive-through line. Why do they even have that machine? It's crazy to me that they haven't moved on from ice cream yet.
Come on.
But yeah,
Ice cream is dank. You kind of,
Oh,
I don't know if I'm
whenever
gonna
you
hate for
get
saying
it.
this, but it's pretty good.
when you get it, geez, take me back to 2017. So everything that you're buying with a business becomes your assets, and most of the time you're buying tangible property, depreciable property, so you can depreciate this stuff on your tax returns, including the asset that you buy.
What if you buy like a service business or like an online consulting firm? I guess you have your tech stack and your team and stuff, but you don't really
Maybe
have
I'm just
physical
writing off
assets.
payroll because there's no physical location.
Ah, okay.
Right?
Yeah,
so I'm
yeah.
limited in the amount of deductions that I can take, but it still make sense for me to buy that business from an investment perspective.
Yeah. No, it's. I was just talking to my wife about this because as Muslims, we're not allowed to deal with interest, like at all.
Yeah.
So it makes the game of real estate very, very hard.
Yeah, you buy everything cash.
Almost like impossible, actually. No, it's not impossible. Like if you have the cash,
Not
you
in
can do
California.
it, but it doesn't make sense. Like if I look at a real estate deal and I'm like, okay, this guy's getting into it with like literally no money out of his pocket, and I'm putting up all this. It just doesn't make sense.
Yeah.
So I've always been of the philosophy like I'm just gonna invest into businesses, rather than kind of real estate, because I feel like I don't know, it's just a healthier methodology from our perspective.
From a cash on cash return, you're not looking at it like that because you're taking all of your cash and not any OPM, right? So for you, it might make more sense to invest in a business that's going to pay you more, knowing that your biggest focus isn't really tax savings. Your biggest focus is
religious
lifestyle and getting to the income goal that you have for you and your family.
Yeah. So
I love that. So BB and I were in the rental car industry for some time, and we used to always use OPM. Like always use it. We used to love it because what would happen was like we'd like lease or like we'd finance a car, right?
Yeah.
And eventually, like renters would just keep on renting out the cars because we'd have like Supras and a whole bunch of like other like nicer cars like M3s and et cetera, et cetera. You get
Nice.
it. The monthly payments would be like $1,300 or however much depending on the vehicle. But then like a couple rentals in, you already reached the $1,300.
Yeah.
you never paid out of pocket, or you rarely ever did. So like that would all be, so we always go through the whole thing of OPM. Right. So like I love the whole thing of what you brought. That definitely brought us to.
No, I definitely like. I'll tell you this. Like,
Yeah.
Last year, end of last year. Yeah, when my
people's
agency
money.
was kind of like taking a whoop de whoop. I kind of started like experiencing. Like, I was curious to like read up on other things because I suddenly had this free time in front of me that that I could use, and I started learning about real estate.
Yeah.
Like I learned about like seller financing, how you can like get a real estate property under contract without even involving a bank if you guys are able.
Like
That's
wholesale.
No. So, like, for example, like even me as a Muslim, for example, I could go up to like a owner who owns the property outright. It's like he's 100% owner. I could be like, hey man, can I buy this property off of you but not pay you, or like instead of, because like what we could do religiously, we could let's say the house is $500,000.
Yeah.
If he sells me the house for $600,000 because he's giving it to me on payments, that's allowed. So like
okay.
religiously, that's okay.
Okay.
It's just the interest that
Yeah.
you're not allowed to make money on money.
Got it.
But if he's making money on what we call the delayed purchase of an actual asset, then that's allowed.
Okay.
Right. So I started looking into factors like that. So you could go, but the only thing that goes against that is the property has to be paid off because there can't be any. Like,
you would still have to buy your property
yeah,
paid off. based on your
exactly.
religion.
Yeah, but like,
But seller financing is a great tool if you're trying to get into real estate. And obviously, we know that the mortgage interests are extremely high right now. So one of the things that you can do is you can make an agreement with the seller financing, and say, hey, I will assume your loan at the 2.5% interest rate that you got during COVID, but I'm going to give you these terms subject to this over the course of this amount of period. And so your seller is turning around and being the own bank and selling you the property. You assume the asset, and you're making payments back to the seller as opposed to the lender.
Would that be? I mean, that's obviously the most ideal, especially with like the 7% interest rate that we're at right now, maybe even more. I don't know, but like what you were talking about, would that be okay on our end?
no.
Or
So
the- or the-
our on end, the property owner has to have it be paid off.
It has to have the actual deed.
Yeah,
Like,
you have to have
here
the
you
deed.
go.
Yeah.
100%.
Because you can't assume the loan because now you're again falling
Right,
into interest.
you're paying
Yeah.
off
Right?
their.
And trust me, I actually studied this for like 4 months because I was so curious. And I was like, dude, I get how people get dumb rich off of this. This is like,
Put like
this is a
5%
hack,
down,
dude.
35% down.
Dude,
you're done.
and not just that, if you know credit hacks, for example, like screw making money. Like I could just go get a good credit, open credit lines like for 0%, and then put that down payment for property and start getting into real
Yeah.
estate, and then leverage that cash flow to pay off my. So it's like I could literally start with zero. Like
Yeah.
I don't need money, you know.
Yeah, that's true.
And
Yeah.
I think doing like I was like, I swear, man, when I started reading this, I'm like, oh, all right, I get it. Like,
Yeah.
I know why people do this, right? But unfortunately, I can't. Like,
Dude, that's how Pace Morby grew his brand, man.
yes,
He's
yeah. I used to watch his videos all the time. He used to do so. That's all he does. Sell
Yeah,
financing.
his company is Subject to, I think, or
Yeah,
Sub
yeah,
2.
yeah,
Calls
Sub
it the
2.
Sub 2 method. So
Yeah.
yeah, there's a whole ideology around
It's
it.
freaking crazy because, like, you know, like for example, he's talking about pace. Like I've seen videos and I'm like, oh, we just picked up like 40 properties, and I'm just like, what the hell?
Yeah.
And then he'll explain like, oh, this is what I did, this is that, and I'm like, that's crazy. Like,
Creative financing.
like what? You know?
Creative financing.
financing.
Yep.
I read the book, The Compound Effect. I forgot the author's name, but this is like years ago. And they really talked about. They actually taught me how to properly save and look at my finances.
Oh, good.
And really just allocate a whole bunch of stuff. But then also what they really like pushed for, was compound interest.
Of course.
Right? Which is something as Muslims we can't really do because, you know, we're making money on money. But like, it's just, it made so much sense. And it's almost like why aren't a lot of people getting into compound interest if they're able to do it? Because it's like, eventually it's just compounding.
Mm-hmm.
You know, just going more and more and more and more, and just everyone talks from like Tony Robbins. He has like a one of his books. I think it's called The Power of Money or something money. I forgot,
Mm-hmm.
but it was just like a whole thick, like 800 page book that I read.
Yeah.
And that was like the majority of it.
Why do you think it is? I mean, I have my own thoughts, but why do you think it is that people don't do it?
Of people don't do what?
Focus on compounding.
Because a lot of people are financially illiterate.
Mm-hmm.
I think because a lot of people focus on the now, dude. Like we're so like there's so much noise, and
that
so all we
too.
care about is how to pay bills today.
Exactly.
We're not
I
thinking
think,
like 10 years.
I think
20
we
years.
as a society don't know how to practice delayed gratification with our money. And that's the one thing
With
that.
anything, I think, really.
Well, yeah. I mean,
Dude,
Americans.
anything you want, just snap a finger, man. Like,
Oh, we want things
food.
yesterday,
Dude,
for
sometimes
sure.
I'll order food like Uber Eats, and I'm like, it still shocks me to this day how I can open up my front door and it's like there's just food right there.
Yeah.
And I'm just like, what? Like, you know, just like with a snap
Times
of
have
finger, you can have
changed.
anything. Yeah, crazy,
COVID
man,
changed the food
crazy.
industry for sure. But yeah, dude, it's delayed gratification. I mean, I remember like being younger, And like, I don't know why I had this weird obsession with collecting rocks. And like, dude, I just needed to have those rocks next to me, bro. Like, like I was collecting freaking big ass rocks from my backyard in different places. And I would just keep them next to me, bro. And my parents would tell me, oh, we're going to put your rocks up and stuff like that. And I was like, no, I just want to have them next to me. Oh, we're going to, take your rocks to go get them shine or anything. Oh, no, I just want to have my rocks next to me. I think naturally as humans, like there's a feeling that we have knowing that something's right there within our reach, touchable in our grasp. And we don't really learn to practice like delayed gratification or giving something and then being willing to receive it back 3, 6, 10 months later, because we don't really practice that early on in our youth. We're practiced to take in my eyes.
Yeah. So like I kind of came from like the whole family business, right? So my dad being a business owner and having to be trying to minimize expenses at all costs in order to try to maximize profits, right? So like from a very young age, I really learned how to just be able to like look at something I really want and be like, I can afford this watch of like any caliber. Not any caliber, let's be honest, but like a higher caliber than just your classic watch. I can afford this car right now just to buy it out. But it's a beautiful thing and it's very empowering, at least to me personally, knowing that you can, and that's it, like without even having to get it, because like, as you said, you look at that bank account and it has 50 G's in it. Mm-hmm. Many people, the second they come into money and they get money, they want to spend it because they're like, oh, I can upgrade my phone every single year, which is a waste of money. I can get the newest thing. I can get the newest car. And I can upgrade. I can upgrade. You're just playing back into that system. The whole broke person mentality.
Yeah.
So like, that's what I mean by what Adam said was really important. But then a lot of people are just financially illiterate because they don't know, like, hey, look, if I'm able to then forecast my money that I have right now, or at least get like some sort of goal. So say if like 100 G's is a goal. Yeah. Let's start off with 100 G's and let's actually just break it down, because if you're starting from zero and you're trying to get to 100 G's, that's very just like, it's very intimidating because you're like, what do I do? How do I do it? I'm barely even saving money right now. And what can I do? And this is impossible. Yeah. But if you start breaking it down, like, all right, cool. If I need to be making X about for like every single month, it makes it a little bit better. Yeah. And you're like, all right, instead of like me making $100,000 in a year with me having zero, let's kind of break it down. Let's make maybe, is $15,000 a year more better? Is $20,000 a year better? And then once you get to that $20,000 that you save a year, what I've done throughout my life is like, all right, I hit $15,000 that year. Mm-hmm. Next year I'm gonna save, not the 15. I already have the 15 shilling in the bank. Yeah. I'm gonna save. Let's just try to do 25. And the following year, I'm like, all right, well, that was pretty. I got to that pretty quick. Let's just do, screw it. Let's just do 40. Yeah. So like just kind of like scaling up from there. So I think that's where like a lot of like financial literacy, a lot of patience, and a lot of not falling into your own desires, because a lot of times we're in a very consumer driven, society.
Especially like, we want that dopamine fix real quick, that instant high we get from buying something.
We want that snap of us driving the car with the rollie on and everything else. And we're like, dude, that like 5 people that might like your post, and you're like, yeah.
Also, I think to add on to your point, I don't think people like. There's not a lot of people that make enough money to ever start asking these questions.
Mm-hmm. Now, would you question their like mindset or maybe their goals, right? Because I know it's situational for many people.
I mean, it starts with like you said, like it starts with the way of thinking, right? Because like for you to get to the point where you're asking yourself, how do I invest and how do I save? You've already been thinking on the right path previously of like, how do I improve?
Yeah, of course.
I need to make more. I don't like where I'm at, like, et cetera, et cetera. There's a lot of people here who are like, I have just no hate to them, but they'd be like, yeah, I want to do $5-10 a month, and that's their like life goal, which, totally cool for that. But I don't think like if you never push that limit, you're never going to get to a point where you have to ask those questions, because you never have that cash laying around anyway.
So basically life is only as big as you make it.
Yeah, straight up. It's a video game, man. It's a straight simulation. But anyway, back to this. This has been like,
I agree to your point. People never do the math. And I think that's the one thing that I learned from Grant Cardone, who's my mentor early on, was, dude, if you want to get to $1 million, back into the math. And that's just, I don't know, it's so simple of a concept, but we don't choose to do it. We just choose to think it. But I think if you can back into the math and write it out, and you're staring at this thing, a couple times a week, if not every single day, eventually you're gonna do things that will move towards you getting to that number, and the universe will start moving its way too towards helping you get to that number as well, coupled with what you talked about, which is discipline. I mean, I have a lot of buddies that want an extra $15,000-$20,000 a month. Every time I see them, they're always telling me about these things that they want to do, but then I'm on Instagram, and next thing you know, they're out popping bottles and doing fun stuff. I'm like, they want to get to that 15,000-20,000 saved up, or that 50,000 saved up and buy an investment property, but they lack the discipline to be able to get there. So at the end of the day, I mean, you can do the math, you can write it down as many times as you want, but if you're not going to incorporate discipline, you're going to have a pretty steep uphill battle.
Yeah.
You know, many times a lot of people get like a dopamine rush off telling you what they want to do. Yeah, I'm going to do this, and I'm going to do that, and I'm going to get like $10,000 off this quick flip, and it's so easy, and boom, boom, boom.
Yeah, we call those dreamers.
Dude,
Exactly.
I'm
they
not
get
gonna,
that, oh, no way, really?
Yeah.
They get that hype from the boys or from whoever. They never end up doing it. They got that dopamine fix. They got that dub in their mind.
Yeah.
But they don't get the dub in real life.
I try to shoot down dreamers all the time because they just talk in these what if scenarios, or I'm going to do this. And I just try to remove that from their conversation and stay focused on what are you doing?
Yeah.
Like, what are you doing right now?
You're almost like a buzzkill in
Yeah.
that thing, but you're being real, right?
Oh, I'm being a help.
Because how many people want to just sit down and just let them be like, all right, just let them speak.
Yeah.
You know, just let them get it out. And you're like, good job, dude. Are you done? All right, sweet.
We've all ran into that older person, that older guy that wishes that they were our age, that wishes they had done stuff, and all they talk about is, all right, I'm going to work on this, I'm going to work on that. Bro, you're 50, 60 years old. Why haven't you been working on it? You've been talking about working on this for how long? Like, you know what I'm saying? How do you get into that position where you're turning around, you're 50 years old, and you wish you would have done things differently? Bro, you're 50 years old. How long were you wishing you would have done things differently, bro? How long have you been telling yourself, I'm going to do this, I'm going to make a change, I'm going to make a difference, I'm going to do the math, I'm going to discipline up, versus constantly telling other people what you're going to do versus actually doing something? Like,
Yep. And then also, too, it's like, let's be honest. Turn back that time. Give him that youth again. Let him be 20 again.
Mm-hmm.
Let him start from the beginning. Do you really think that he would actually do what he wants? What he said?
probably
that he
repeat the
wanted
same
to do?
mistakes, yeah.
He'll make it exactly.
No.
Oh, dude, if only I was 25 again. Say if I was 50. You're 25 again.
Yeah.
Oh, dude, I'm young again. All right, let's hit the club.
Age is just a number.
Thing, dude.
Yeah.
So you want to say
You know-
that
you know
just
what's
to make
interesting?
yourself feel a little bit better.
This
Yeah.
is what
Little petty party.
I love. This is where I'm so grateful for my religion, because like we can't party, can't drink, can't do any of this public social stuff. So it saves a lot of money, and you're forced to stay disciplined because like what else are you gonna do, right?
Yeah.
Like when you're like, all right, I can't party on a Friday night. All right, I guess I'm gonna chill with the boys. Oh, I can't do that. All right, I guess I'll just stay at home and read. Like like.
What do you mean chill with the boys though? Because that could be like
No.
going to
I
a
mean,
coffee
like
shop
that
or
would be my
something.
first option.
That's
Like,
okay.
oh, I'm gonna hit you guys up, or I'll hit something like, oh, they're not available. Okay, cool. I'm just gonna chill out. I have a lot more reoccurrences where I end up just like chilling at home and working, because like I'm like, all right, there's nothing really else to do.
Yeah.
Right. So it's like I wake up, I'm told I gotta pray, I gotta do my religious studies, and then I get to the gym to focus on my health, and then get to work so I can focus on my future, and that's it. That's what life is, right? Like that's what we're taught as Muslims. Like that's what
Yeah.
life is. All that extra stuff is temptations, and you shouldn't get into it.
That's why I think religion is important. I think if you would examine most successful people, they believe in something. I would 100% say that they believe in a higher source, and that higher source has helped them from a disciplined perspective get to where they need to get to, right? I may not be Muslim, but I'm Christian. I know that my Christian morals had helped me from a disciplined perspective to say no to certain things in my life that has presented opportunities for me, right? And I think you guys can all say the same too. So I think that's probably the fundamental thing of this all. There's nothing else we talk about for the rest of this conversation, is knowing that that is the one thing that can help the most people is, being willing to go in one direction with your faith and, seeing where that takes you.
It's very comforting to know, like, and I don't want to switch this solely to like, religious and stuff, but from my perspective, I think it's very comforting where when issues hitting the fan and maybe like I'm starting something and I don't really know what I'm doing and stuff like that, it's very comforting to know that I'm not alone.
Yeah.
Right. That like at the end of the day, I got God by my side.
Mm-hmm.
So like, that's definitely a great feeling to have, at least in the back of your mind when you do feel alone.
Yeah.
And even if you may actually be alone,
Yeah.
it's just that you have that little thing, that little thought, like, I'm not really alone.
Yeah.
Like, just God's somewhere.
Yeah.
Actually, I can feel him.
Yeah.
He's somewhere over here. But like, I think that maybe that's why, to kind of go on to your point of like a lot of people who are successful are typically religious, or at least they ascribe to a specific, higher being.
Right.
So like, it makes sense from like that part, because
I think you know what? Well, I mean, like
Yeah,
I
you're
don't know
right.
if this happened to you, Carlton, but like it happened to me a lot. Where like there's so much noise in the business world and
Yeah.
so much noise in life in general that like when you're highly driven, highly focused, you start hitting strides and you hit your goals. So you start asking different questions. Like I said, like I
course.
really think like every level opens you up to different questions.
Yeah.
And I think after you've accomplished the whole I'm gonna make money, next comes, which I think it should be the opposite, but like usually what I see is people go, I'm gonna make money, and then they go, okay, what is God? Like after that, like, or what is this religion? Or like, what is my greater purpose? Because now I have all this cash, but I don't know how to
A
afford
lot
to
of people
put
make
it.
the money, and then they're like, I don't need God. I'm good.
Really, I've
Yeah.
seen the opposite. I don't know. I've seen like I mean, obviously you see like greedy people and like so on and so forth. But
We see people who make money and think they are God.
Yeah.
We see people we see people who make money and don't want it anymore because of God.
Yeah,
right?
yeah,
So I think it plays on both spectrums.
It's like
but
a J. Cole.
Yeah.
honestly, you know, like, that's what I think about.
anyway, my man, I don't want to push this too hard on religion, but I appreciate you for hopping on, dude. This has been a
Oh,
blast.
dude, I can't
this
even
was-
believe we
this
just
was
ripped for
awesome.
over an hour right
This
now.
was-
That is
we
nuts.
we just went ham.
Nuts.
Where can people find you? I know in the previous episode we kind of pitched that in, but
Yeah.
if you want to just drop a quick plug.
Yeah, I'm on Carlton Dennis at every different social media outlet, whether it's Instagram, Facebook, YouTube. Oh, Carlton Dennis on every single social media outlet, whether it's Instagram, Facebook, YouTube. You can find me, send me a DM, and I'd love to connect with you.
Sweet. All right, my man. Well, hey, appreciate you for hopping on. Thank you so
Appreciate you
much.
guys.
man.
Thank you.
Pleasure.
Yeah.
Thank you.